From the trading desk of DailyForex.com, this is Christopher Lewis looking at the upcoming June 5th Forex session. And in front of you is the Euro US dollar pair, and you can see that we had a slightly positive session on Tuesday after banging around, retesting this breakout candle. And I think it's safe to say that the area did hold a support. Of course, above we have quite a bit of noise. So, quite frankly, if we get above here, I expect to move up to 132. Sorry, uh, but whether or not we can break out of that, that might be a completely different story. And in fact, I wouldn't expect that until after Friday's non-farm payroll numbers. Right now, I look at the market, and there's a reason why I only have three lines on this chart, like this. We are simply either in the upper area, which we are now, or we are in the lower area of this consolidation. I don't want to make this more confusing than it has to be, and therefore, I just trade it like that. I think that the 132 will hold again until after the non-farm payroll number. The non-farm payroll number will be important this week because of this candle, the Monday candle. That was in reaction to disappointing PMI numbers out of the United States, which just absolutely pummeled the US dollar. Now, people are starting to question whether or not the Fed is anywhere near tapering off a quantitative easing, and that's exactly what this pair is focusing on. And that's the only thing this pair seems to be focusing on. The European Union debt crisis, well, it's gone, evidently, even though nothing was done to actually fix it. It will creep its way back into the news, but not right now. Everybody's worried about what the Fed's going to do and whether or not they pull away the cheap money. If they do, that will skyrocket the value of the dollar, and this pair will fall. If they don't, then this pair could move much higher. That being the case, we should see some type of decisive motion on Friday. Now the question is whether or not it is going to be poor enough that we can break out and above the 132 level, because in that circumstance the Fed would continue easing as pretty much as long as they can, and the markets really should start to pick up momentum then. On the other hand, if we find that the jobs number is really strong, a really good one, then we should see a sell off because the Fed was going to be that much closer to cutting out the quantitative easing. Truthfully, though, I expect, if I was to place a trade right now, I expect this area to hold for some time. There's nothing in this chart that tells me that we want to break out quite yet, so that's kind of my bias at the moment. I do not um, anticipate any significant moves outside of this 400 pip range, which quite frankly is plenty of a range to make a profit in this market. But beware of the fact that Friday will be vital, and as such, the closer we get to Friday, the market might actually sit still. Perhaps on Thursday, we'll probably do very little. Very few people will be willing to take any risk.